Two reports are about to drop that could completely change the direction of silver, and most traders have no idea how to read them. The PPI data and the Fed Beige book are coming, and if you don't know what to look for inside those numbers, you are going to be reacting to the market instead of anticipating it. And in silver, the difference between reacting and anticipating is the difference between catching the move and chasing it. So right now in this video, we are going to break down exactly what these two reports are, exactly what signals matter for silver traders, and exactly what scenarios could play out depending on what the data shows. By the time this video ends, you're going to have a cleaner, sharper framework for reading these reports than 90% of the people trading silver right now. Let's start with the basics, because I want to make sure everyone watching this is on the same page before we get into the deeper analysis. PPI stands for Producer Price Index. Think of it as the inflation report that measures prices before they reach the consumer. It tracks what businesses are paying for raw materials, energy, components, and services at the wholesale level, the pipeline of costs that eventually flows through to the prices you and I pay at the store. And the Fed Beige book is a report that the Federal Reserve publishes 8 times a year, compiled from interviews and surveys across all 12 Federal Reserve districts. It's the Fed's own street-level view of what's actually happening in the economy, what businesses are saying, what consumers are doing, what employers are planning. It's qualitative where PPI is quantitative. And together, these two pieces of data paint a picture that directly influences the Fed's next move on interest rates. And interest rate expectations, as any serious silver trader knows, are one of the most powerful drivers of where silver goes next. So why does this matter so much right now? Because we are at an inflection point. The market is genuinely divided about what the Fed is going to do next. Some analysts think rate cuts are coming sooner than expected. Others think the Fed is going to hold higher for longer because inflation is proving stickier than hoped. And that uncertainty, that genuine unresolved debate about the direction of monetary policy, is creating volatility in silver that creates opportunity for traders who understand the signals. When the PPI and Beige book drop, they are going to shift that debate, and the shift is going to move silver. The only question is which direction. Let me walk you through the first scenario, the hot PPI scenario. If the producer price index comes in higher than expected, meaning wholesale inflation is still running hot, meaning the costs that businesses are absorbing are still elevated, that sends a very specific message to the market. It says that inflation has not been tamed. It says that the Fed's work is not done. And it increases the probability that the Fed is going to hold interest rates at current levels, or potentially signal that cuts are further away than the market had hoped. Now, on the surface, that sounds bearish for silver, because high rates mean the opportunity cost of holding silver goes up. Silver pays no yield, so when you can earn 5% in a money market fund, holding silver feels less attractive. But here's where it gets interesting, and this is the nuance that separates informed silver traders from everyone else. A hot PPI reading isn't automatically bearish for silver. It depends on the context. If the PPI is hot because energy costs are spiking, because commodity inputs are rising, because raw material prices are climbing, that is actually an inflationary signal that historically supports precious metals. Because what a hot PPI is really telling you in that scenario is that the inflation fight is not over. And when inflation is persistent and entrenched, silver and gold have historically performed as some of the best hedges available. The fear of ongoing inflation can actually overwhelm the rate headwind, especially if real rates, meaning the interest rate minus the inflation rate, are still negative or only marginally positive. So with a hot PPI reading, what you want to watch for is the composition of the number. Where is the inflation coming from? If it's services driven, if it's sticky domestic inflation, the Fed tightening narrative wins, and silver faces near-term headwinds. But if it's goods driven, commodity driven, supply chain driven, that's a different story. That's the kind of inflation that silver and gold thrive in. Watch the breakdown, not just the headline number. Now let's talk about the cold PPI scenario, because this one is more straightforward and arguably more immediately bullish for silver. If the PPI comes in cooler than expected, meaning wholesale inflation is easing, meaning the pipeline price pressures are starting to subside, that increases the probability that the Fed has room to cut rates, and rate cut expectations are rocket fuel for silver. Here's the mechanism. When traders and investors start pricing in rate cuts, the dollar typically weakens. A weaker dollar means commodities priced in dollars, including silver, become cheaper for international buyers, which boosts demand. At the same time, falling rates reduce the opportunity cost of holding silver versus yield-bearing assets. And falling rates are also typically associated with a risk-on environment where economic growth is expected, which means industrial silver demand picks up too. You get monetary demand and industrial demand pushing in the same direction at the same time. That is a powerful combination. A cool PPI reading also tends to move bond yields lower, and there is an inverse relationship between real bond yields and silver prices that is remarkably consistent over time. When real yields fall, silver tends to rise. When real yields rise, silver tends to face pressure. So if the PPI data gives the bond market reason to rally, meaning yields fall, keep a very close eye on silver because that correlation could kick in fast. Hey, if this breakdown is helping you think more clearly about how these macro reports connect to silver, take 1 second right now and hit that like button and subscribe to the channel. We do this kind of analysis every single week, connecting the economic data to what it actually means for precious metals traders. Hit subscribe and you will never miss one of these breakdowns again. Now let's keep going. Now let's talk about the beige book, because I think this is the more underappreciated of the two reports and frankly the more interesting one for traders who want to understand the qualitative picture. The beige book is not a number, it's a narrative. It's the Fed telling you, in plain language, what the economy looks like from the ground up. And for silver traders, there are specific phrases and themes inside the beige book that act almost like signals. The first thing to look for is the language around consumer spending and business investment. If the beige book paints a picture of slowing consumer demand, cautious business hiring, and deteriorating confidence, that is a signal that the economy is weakening. And a weakening economy increases the probability of Fed rate cuts, which, as we just discussed, is bullish for silver from a monetary perspective. Watch for phrases like modest growth, slight contraction, cautious outlook, or softening demand. Those are the phrases that tell you the economy is losing steam and the Fed may need to respond. The second thing to look for is the language around wages and labor market conditions. If the beige book shows that wages are still rising strongly, that labor markets are tight, that businesses are still struggling to find workers, that is inflationary pressure. And persistent inflationary pressure from a tight labor market complicates the Fed's ability to cut rates even if they want to. That's a scenario where silver could go sideways or face near-term pressure from the rate expectation side, even though the underlying inflation picture might still support it over a longer horizon. The third thing, and this one is specifically relevant for silver's industrial demand story, is what the beige book says about manufacturing activity. Silver is deeply embedded in industrial production. Electronics, solar panels, medical devices, automotive components, all of these sectors consume silver. If the beige book is reporting that manufacturing is contracting, that orders are falling, that factories are slowing down, that is a headwind for silver's industrial demand. If manufacturing is holding up or expanding, that supports the industrial case for silver, even in an uncertain monetary environment. And the fourth signal to watch, which people almost never talk about, is what the beige book says about real estate and construction activity. This matters because construction uses silver-containing materials and components, and more importantly, because the health of the real estate market affects how the Fed thinks about the consumer. A weakening housing market tends to push the Fed toward accommodation, which means lower rates, which, as we've established, is generally positive for silver. Now let me put this all together into a framework that you can actually use when these reports drop. You're going to want to think about this in terms of 4 possible outcome combinations. Combination 1, hot PPI plus hawkish beige book. This means inflation is still running hot and the economy is still resilient. The Fed holds rates higher for longer. Silver faces near-term pressure, especially on the paper trading side. But watch the physical market, because if industrial demand is strong and the supply deficit is intact, the dip might be shallow and short-lived. This is not a panic scenario for silver. It's a patient scenario. Combination 2, hot PPI plus dovish beige book. This is the stagflation signal. Inflation is running hot, but the economy is weakening. This is historically one of the most bullish environments for precious metals that exists, because it puts the Fed in an impossible position. They can't raise rates to fight inflation because the economy is too weak. They can't cut rates to support growth because inflation is too high. And in that environment of monetary paralysis, hard assets like silver have historically been where capital flows in a serious way. If you see this combination, pay very close attention. Combination 3, cool PPI plus hawkish beige book. Inflation is easing, but the economy is still running hot. The Fed might be in a comfortable holding pattern, but rate cuts are on the horizon. This is a moderately bullish environment for silver. Not explosive, but constructive. You're likely to see the dollar soften gradually and silver grind higher over time as rate cut expectations build. Combination 4, cool PPI plus dovish beige book. This is the most immediately bullish scenario for silver. Inflation is coming down and the economy is weakening. The Fed has both the motivation and the justification to cut rates. The dollar weakens, real yields fall, investment demand for silver picks up. Industrial concerns are offset by strong monetary demand. This is the scenario where you could see silver make a sharp, fast move to the upside in a compressed time frame. Keep that framework in your head when the data drops. It's not about reacting emotionally to a number. It's about understanding which combination you're looking at and what the historical behavior of silver has been in that environment. Now, there's one more thing I want to add before we wrap this up, and it's something that the data reports alone won't tell you, but that is critically important context for any silver trader right now. The positioning in the silver futures market matters enormously when big economic reports come out. If speculative long positions in silver are heavily extended going into the data, meaning a lot of traders have already bet on silver going up, then even a mildly positive data release can trigger a sell the news reaction as traders take profits. Conversely, if positioning is relatively neutral or even net short going into the data, a bullish data combination can cause a violent squeeze as those short positions are forced to cover rapidly. This is why context is everything in silver trading around data events. The number itself is only half the story. The market's positioning and expectations going into that number are the other half. And the combination of the two is what determines the actual price action you see in the hours and days that follow the release. Experienced silver traders don't just watch the PPI and the beige book, they watch the reaction to the PPI and the beige book, because sometimes the market has already priced in a certain outcome, and when the data confirms that expectation, there's no more fuel to push the price higher. The move already happened before the report. Other times, the data surprises. It comes in differently than consensus expected, and that surprise is where the real price action happens. So here's the bottom line heading into these reports. The setup for silver is genuinely interesting right now. The fundamentals, supply deficits, industrial demand, monetary debasement, geopolitical uncertainty, are all in place. What the PPI and beige book are going to do is determine the near-term path and the catalyst for the next directional move. A bearish data combination for silver might create the dip that strong hands use to accumulate. A bullish data combination might light the fuse on a move that's been coiling for months. Either way, the information that hits the market in these two reports is going to matter, and now you have a framework to interpret it. Don't just watch the headlines. Watch the composition. Watch the language. Watch the Fed's reaction. Watch the bond market. Watch real yields. Watch the dollar. All of those things move together in a system, and silver is connected to all of them. The traders who understand those connections are the ones who see the setup before it's obvious to everyone else. Before I let you go, I genuinely want to hear from you. Drop a comment below right now and tell me, what's your read going into these reports? Are you expecting the data to come in hot or cool? Are you positioned in silver right now or watching from the sidelines? These conversations in the comments are some of the best trading discussions that happen on this channel, and your perspective matters. And if you got value from this breakdown today, share this video with someone in your trading circle, a friend who follows the metals market, someone in a trading group you're part of, anyone who wants to understand how macro data connects to silver. Hit that share button. It costs you nothing, and it genuinely helps this channel keep producing content like this. PPI data, Fed beige book, 2 reports, 4 possible outcome combinations, 1 framework. Now you know exactly what to watch for. Stay sharp, stay informed, and we'll see you in the next one.